Assalamualaikum warahmatullahi wabarakatuh. Before I start this presentation, let me introduce myself. My name is Muhamad Safitri Ruswandi and I am from Accounting Department, Faculty of Economic, Universitas Negeri Jakarta. And now I want to present to you about my research. The title of my research is The Influence of Threat Frequency, Financial Ratio and Market Capitalization on Syariah Stock Return. This is the background. Investment is an alternative to get a fairly effective profit. Investment can be made in various forms, both in the form of real asset investment and financial asset investment. An investment alternative that promises high returns with high risk is investing in stocks, but of course investors need a lot of information to consider their investment. Based on the 2019 BEI Trading Closing Report, the performance of the Indonesian capital market in 2019 was quite positive amid dynamic geopolitical and global economic developments. The Islamic capital market has also experienced positive developments. The growth in the number of shares included in the list of Sharia securities was 445, with a capitalization value of 3,767.93 trillion rupiah. And this is the research question. The first question is, does the stock frequency trading affect the Sharia stock return in companies listed in Jakarta Islamic Index 2016 to 2020? And the second question is, does the company's financial ratio have an effect on Sharia stock returns in companies listed on the Jakarta Islamic Index 2016 to 2020? And the third question is, does the market capitalization affect Sharia stock returns in companies listed on Jakarta Islamic Index 2016 to 2020? And this is the research proposes. The first is to examine the effect of stock trading frequency on Sharia stock returns in companies listed on the Jakarta Islamic Index 2016 to 2020. The second proposed is to examine the effect of financial ratios on Sharia stock returns in companies listed on Jakarta Islamic Index 2016 to 2020. And the third proposed is to examine the effect of market capitalization on Sharia stock returns in companies listed on the Jakarta Islamic Index 2016 to 2020. And this is the benefits of research. The first is theoretical benefits. For researchers, this research is expected to gain a deeper understanding of the factors and the variables that can affect Sharia stock returns. For science, this research is expected to contribute ideas and empirical evidence regarding the effect of trading frequency, financial ratios, and market capitalization on Sharia stock returns in companies listed on the 2016 to 2020 Jakarta Islamic Index. The second benefits of research is practical benefits. For companies, this research is expected to be input for companies' management in providing information related to companies' performance and determining company policies that can affect the company's stock returns. And for investors, this research is expected to be used as useful information for consideration before deciding to invest in a company. And then the literature review. The first is agency theory. The main focus discussed in agency theory is on the relationship between two parties, namely the investor as the principal and the manager as the agent. Agency theory discusses the problems that will arise in a company caused by differences in personal interest and desires between the owner, or principal, and the company manager, or the agent. Agency theory arises when the business activities of an entity are not managed directly by the owner of the entity and all matters concerning management are left on the agent. And then the efficient market hypothesis theory. A broad understanding of the efficient capital markets is a situation where there is a new information both from the government of a country and the company or issuers concerned. Then the information will be spread widely, quickly, and easily and can be obtained cheaply by market participants or investors. An efficient market is a market condition where stock prices describe the actual state of the company, while an inefficient market is a market condition where the price of securities is significantly influenced by investor behavior so that the stock price does not reflect the actual state of the company. And this is the three groups of efficient market forms. The first is strong form market efficiency, the second is semi-strong market efficiency, and the third is weak form market efficiency. And then capital asset pricing model. Capital asset pricing model is a model that describes the balance between the level of systematic risk and the level of return required of portfolio securities. CAPM aims to determine the expected rate of return from risky investments. In addition, the CAPM can assist investor in calculating the risk that cannot be diversified a portfolio and compare it with the rate of return. And then the stock returns. Stock returns is the expectation of investors from the funds invested through stocks, where the result of the investment are in the form of yields and capital gains or losses. The stock returns itself can be divided into two, namely the realized stock return and the expected stock return. Realized stock return is the rate of return that has occurred and can be calculated using historical data. Meanwhile, the expected return is the stock return that has not yet occurred but is expected to occur in the future. Stock returns are measured using the stock return formula as follows. And this is the formula about stock returns. Next is stock trading frequency. Stock trading frequency is the number of stock trading transactions in a certain period. The frequency of stock trading describes the state of how many shares of a company are traded in a certain period of time. The higher the trading frequency of a stock, the more actively the stock is traded. The frequency of stock trading greatly affects the number of shares outstanding. If the number of shares trading frequency is large, the shares are declared as the shares most actively traded and indirectly affect the volume stock trading and also the stock price during the period. And then the financial ratio. Financial ratio are ratio that can see the financial condition of an entity in a certain period. Ratio analysis is a form or method commonly used by company shareholders to be able to see and assess the performance of the financial condition of the company, especially in terms of making an investment decision. First is earning per share. The EPS or earning per share is the ratio used to see the level of profit earned for each share owned by investor. And this is the formula to search the EPS. The second financial ratio is return on equity. Return on equity is a ratio used to see and measure the level of effectiveness of the company in generating profits by utilizing its shareholders' equity. And this is the formula about ROE. And the third is debt to equity ratio. Debt to equity ratio is a ratio used to see the level of use of debt to the total shareholders' equity owned by the company. And this is the formula about DER. Next is market capitalization. Market capitalization is a value that shows the measurement result of the company based on the value of shares outstanding at a certain time period. In general, stocks with large capitalization values are the target for investors to make long-term investments because stocks with large market capitalization have positive potential in terms of company growth in addition to dividend distribution and relatively low risk exposure. Because of many investors are interested, the stock price will generally increase along the high investor interest. This will provide a relatively high returns as well. And this is the previous research, the 1 to 4, 5 to 8, and this is the 17 to 20. The title, order, and results, you can see this. Next is hypothesis. I have 5 hypotheses to my research. The first is trading frequency has a positive effect on Islamic stock returns. The second hypothesis is earning per share has a positive effect on Sharia stock returns. The third hypothesis is ROE or return on equity has a positive effect on Sharia stock returns. The fourth, debt to equity ratio has a negative effect on Sharia stock returns. And the fifth is capital market capitalization has a positive effect on Islamic stock returns. The next is research methods. The first is unit of analysis. The unit of analysis in this study is a company listed on Jakarta Islamic Index during 2016 to 2020 period. The population of this research are used were companies listed on the Jakarta Islamic Index in 2016 to 2020, amounting to 30 companies. The sample of this research is amounted to 27 companies listed on the Jakarta Islamic Index in 2016 to 2020. And the sample were selected based on the purposive sampling method. And this is the variable operationalization. This is stock return, trading frequency, earning per share, return on equity, debt to equity ratio, and market capitalization. And this is how I get the number of the variables. The next is analysis technique. The first is descriptive statistical analysis. The second is panel data regression analysis, which is polling least square, fixed effect approach, and random effect approach. The third is classic assumption test, which is normality test, multicollinearity test, autocorrelation test, and heteroscedasticity test. And the fourth analysis technique is hypothesis testing, which is the t-test, f-test, and coefficient of determination. Thank you for the attention. Wassalamualaikum warahmatullahi wabarakatuh.